Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index, of which this is one. I want to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I'm still not a licensed financial professional. I'm just a guy who draws lines on charts. So let's look and see what happened today. The first thing I want to say is if you are watching this video on October 19th, then you are a subscriber, and thank you for your support. I really do appreciate it. The support has been very good, and I hope that this is something that you'll stick with for a while, because there bound to be some ups and downs, not just with the market, but also with the accuracy of using these techniques to read charts. But hey, guys, so far this has been pretty good stuff. So let's see what develops. If you are not a subscriber, then this being the Wednesday video, you are not seeing it on Wednesday after the close. Instead, you're seeing it on Friday. And also, yesterday's video, the 18th, you will be seeing today. Well, never mind. That didn't work out because today is Friday. Look, let's just cut to the chase. You need to subscribe. That way you won't get me more confused than I am already. So anyway, this is what we're looking at. We were looking at a downward channel from the end of the day on the 16th that lasted all day on the 17th, bounced up at the bottom on the 18th, and then started a small channel up. That in yesterday's video I made mention that it looked to me like we were probably going to turn over from here, at least to some degree, because we had reached the same level that had been reached back in the end of August, beginning of September. Now, what else were we looking at yesterday that came to fruition today? Well, one thing is that we had been seeing from the bottom back here on the 4th and 5th, that little double bottom down there, you could see that huge rally from roughly 1080 all the way up to the 1220 area, that this line served as a support line for that. You see that? For 1, 2, 3, 4, 5, 6, 7, 8 days, that served as support. Then it broke down. Now, we have learned over time, not just us together here in these videos, but those who do technical analysis in general, have learned that when you have a line that's been working for a while, when it breaks down, it often creates a back test. So, that late day rally that was stronger than I thought it would be yesterday, look where it came. It came up for a back test in this orange channel. Okay? We had a little inverted head and shoulders here that told us that the market was going to head up from this point, but then when it reached this back test level right up around the 1230 area, it sold back sharply, and then it entered what looked to be an area of congestion. Some were thinking maybe this was a bull flag, but the problem is that we'd already back tested that broken support line, and I think it was not realistic to expect this bull flag to produce more upward momentum. Additionally, if we back off to a 10-minute chart, you can see that what looks to have happened is we have created a new pattern that may end up being a broadening top. And if that is the case, that 1230-ish, 1232, wherever it was exactly yesterday, would be likely the high for a while. So let's see, going back to a 5-minute chart, let's see what happened today. Well, again, here's this channel, this rising channel that came up and tagged a little bit over 1232. That broke down today, and there's a little, there's always other ways you could draw lines. You know, I drew this as a parallel channel because I thought that was the safest way to do it. But you know, the case could be made that this also was kind of a rising wedge that broke down, and then that sort of back tested too. But I like what this shows a little bit more, and I think that's a safer thing to do because we know once a parallel channel breaks that it's a broken trend. When if we'd gone with this wedge idea, then that's not quite as easy a thing to keep tabs on as things move around through the day. So you can see that that thing that some were considering was a bull flag here that instead showed itself to be a reversal. And again, there are two reasons why one would expect that to reverse. The first is it happened after a back test on that broken rising support line. Here's where it broke. Here's where it back tested. You don't expect it to back test and then just keep going up. You expect it to back test, then fail. The other thing is once we got underneath this rising line right here that was parallel to what took place yesterday, here, broke down, back test, you don't expect it to get higher than that. You expect it to fail. That doesn't mean it always fails, but you expect it to fail. Now, where did we bounce today? Well, that's interesting. Looking at a 30-minute chart, we bounced on the line that was drawn over the lows of the 10th and the lows of the 13th. Those lows were temporarily taken out, but very briefly, late on the, I believe, hold on, let me go to a 10-minute chart just to make sure I get this right. Those lows were briefly taken out very, very late by a slim margin on the 17th, by a more decisive margin on the 18th, but then this line sort of makes it look like this was an aberration. So let's see what happens. This is kind of what I see. I see this purple line down here as representing support. I see this gray line as well as this blue line and this black line as representing resistance. And if this gray line breaks, then I would expect this move to continue down to the low 1190s. I can't tell you for sure right now if that line is going to break. I kind of think it will, but there's no guarantees at this point. It could be that this is an aberration right here, and this is a legitimate bounce. For that reason, the short that I did near the close yesterday, I went ahead and covered that today. Wasn't a huge gain, but hey, I'll take it. So, if this line breaks, then I would expect, let's put it in concrete terms. If tomorrow sets a new low, we hit a low that is under 1206, 1205, 1206, then I would expect that tomorrow will continue selling down to the low 1190s. If, however, this market rallies, then I would expect resistance again around the high 1220s, 1230 area. If 1233 gets taken out, then that could set up a back test of the neckline of the Head and Shoulders top. It would be around roughly 1270s somewhere. That line moves around a little bit because it has a little bit of a slope to it. Tomorrow that would be right around 1270. So you can see this pattern that's developed here over the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 plus weeks. And I think we need to keep our eyes on this pattern. I personally am hoping that we get a good solid back test of this orange line right here in the next 2 or 3 weeks. I think that would represent a likely good buying opportunity, because this pattern may end up being a reversal, with 1080 being the low. I'm not saying that for sure, but that is a distinct possibility. If we run on up and take a run at 1270 before hitting this orange line, then I would think that that would actually bring about a more bearish long-term outcome than for this market to go sideways for a few more weeks, come back and test this line. Then if it can take this neckline out, then I believe it will take this one out as well and head up to the high 1300s. That's very preliminary at this point, but that's just kind of something I'm keeping my eye on. For right now, for tomorrow, this little bunch up right here looks like it could be, it's either going to be a reversal off of this line to come back and possibly test this gray line. Why did that do that? Hold on. Sorry about that. As I was saying, this could be a little area of congestion that's setting up as a pause in to continue a move down to the 1190s. That has a fairly plausible look to it, but in order for that to happen, this gray line has to get taken out. So if this line gets taken out by a decent margin, then I think this move continues on down to the purple line in the low 1190s. If, however, the market can get up over this purple line that is the neckline from this little head and shoulders here, I'm using that as probably having some technical significance left to it. In other words, if tomorrow's an up day, I don't think it's going to be a real big up day. I think it may head on up to the, to where we came from today, but then get turned back down. Again, if you look at the bigger picture, you can see that this may be a broadening top. Broadening tops typically have bearish outcomes. They're not a whole bunch of broadening continuation patterns, but in all honesty, just to let you know, if you want to find a chart example of a broadening pattern that served as a continuation, Amazon did that a while back. Look at the last area. Well, heck, let's just look at it right now. There you go, front and center on the screen, Amazon.com, between these little teal lines. This pattern right here, when it first happened, looked horrible. It looked like that was going to reverse back big time, bounce off here, and then take that bottom line out. Instead, this actually did serve as a broadening continuation pattern. I don't think that's very common. I can't remember, other than this one, the last time I saw one behave like that. So anyway, there you go. Let's look back at the S&P now. So you can kind of see that same pattern here, where there's a peak, a touch on this line, a larger rally, a touch on the same line, and then an even larger rally that has now been turned back. So here's the deal. If this line right here gets violated, and that's around 1192 tomorrow, call it 1190, because you got to give it a little room for just the way the market trades. If that line gets taken out, then I'm thinking another 50-point downside at least. But wherever we meet that orange line, if this happens, wherever we meet that orange line, that should be a good spot to expect a significant bounce. Okay? So look, thanks for watching this video. And just remind you again that that if you're seeing this video and it's the end of the week on the 21st of October, then you're not a subscriber. And I don't want to harp on it too much, but it's cheap. It's $19.95 a month, or $189.95 for a year. I will be doing these videos. My goal is at least 95% of the time the markets are open, a video is produced after the close. We look specifically at the S&P 500 as our indicator of market health, but we also look at other things too from time to time. So thanks for watching this, and please consider, come visit us at sp500chart.com, and hope to see you soon. Thanks.